Hey guys, welcome to our daily show. I'm Jared from Clip Capital, and today we're going to be going over 50 charts to provide you with our technical analysis, insights, and forecast on where markets could go. Okay, so today markets were up a little bit. Today, a little bit of a risk on today. We're still on this tight channel on the S&P 500. Volatility was very subdued. It was actually surprising today to see the VIX off 6.28% down to 20.5, given we do have that major CPI report coming in on Thursday. I do expect the 20 level to hold on the VIX. It would be very surprising if we would be going meaningfully below that going into Thursday, and one could easily expect a bump up back up to high 22s, 23 into Thursday CPI report. Small caps were the winner today, up 1.48% on the Russell, just edging above its 50-day MA. Developed stocks just holding, emerging holding the top of its range where it's in a supply zone. Was a risk-on mood today with cyclicals outperforming defensive, tech outperforming S&P, small caps the big outperformer, and growth outperforming value. Yield curve, let's just take that log chart off. A little bit higher. Onto sectors. Today the sector winner was biotech, up 2.8%. We're still stuck in this really tight range here. I'll just go to the medium term on the 3-day, and we can see it's really been stuck in this range since September, which is huge. Other than that, only one sector down today, staples. So defensive stocks were pretty weak. You can see that, and utilities was basically flat as well. The semis were up pretty good, 1.3. Discretionary up 1.2. Communications up 1.5. And it looks like we've broken out of this trend line on the communications sector. Energy holding strong, and gold up there too. 10-year bond treasury note yield up 2.9%, 3.62. So we are expecting this demand zone around the 3.5 level to hold. If we were to break that, that would be very bullish to stocks. Otherwise, we hold this and trend back up, that will be bearish to stocks. I've got a feeling we'll be seeing 4% within the next few weeks. So with that, with yields higher, bonds sold off, especially treasuries, and since we had a bit of a risk-on mood today, high yield was basically flat. Dollar still holding underneath this low here. We're in a bearish short-term trend, but still bullish on the medium-term trend on the 3-day. However, we trick a bit lower, I think this will turn bearish. Over to commodities, flat. Dr. Copper had a nice breakout, 1.65%. So that would be indicative of risk on. So that is interesting. That is bullish for global economic activity, and really flies in the face of the narrative of everyone predicting a recession this year. So it's kind of interesting what's going on in the markets with regards to the narrative and what's actually happening in markets. Remember, markets, the price of markets is the true leading indicator, as technicals lead and fundamentals follow. So I will always take what price action is doing before what all the pundits on TV and media are saying. Gold trickling higher, as is silver. Natural gas down today, 8%. This thing is volatile, and we are looking at the long play here for a mean reversion back to 1844 with a stop at 985, just under the psychological 10 mark. So we are deeply oversold, 38% below the 50-day, which is an extreme in the last year. And we are at a point, let's just go to the medium-term trend on the 3-day. We can see that there is, I'll just zoom out again to the weekly. So that low back in December 21, that low was 1169. If we just put in a support there, so we did go a bit below that today, but this would probably be more of a zone. So, like I said, we're looking for it to hold the 10 level, and what we think is a good mean reversion play. We've got a lot of volume coming in here, which could be indicative of a bottom. Uranium edging up to the top of its range. Oil basically flat, still in downtrend on the daily. Medium term, still uptrend. Apple still sitting down at the bottom of its range, trading really flat and heavy. AMD, little tick up. Amazon, surprisingly volatile Amazon stock for how big this company is. I don't think this volatility can continue for much this year. It's gonna stabilize at some point. Alibaba ripped higher again today. It's really got some momentum to it. I would not buy it here since we are 37% above the 50 days. We're quite stretched. Also at the top of the buy sell band. And we have just gone bullish on the medium term on the 3-day. However, it looks like there is some overhead resistance around this level here. So that'll be one to watch. I wouldn't short it and I wouldn't buy it here. I would, if you were looking to get long, I would wait for a consolidation, a pullback, and it really needs to defend this gap here at 97. If we fill that gap, that would be bearish. The bearish trend could be continuing. Otherwise, if we hold 100, that is bullish price action. Google down, just trading really heavy and flat, like what has been the last theme the last couple of months with the big mega cap techs, just trading really heavy and flat. You can see it's quite a persistent downtrend in the short term, medium term, and long term. We are downtrend here. So, however, if we look on our fair value indicator, 50% undervalued, we've got fair value at 177. So this could start getting supported soon with value buyers and investors, institutional money. They've got money to park somewhere, put to work. Google's probably going to be on many of those people's lists. Meta ripping higher again, 2.72%. Looks like it is definitively broken out of its trend line here. So we are actually bullish on this name from a valuation perspective as well. We've still got it as 57% undervalued, the most beaten down name of the mega caps the last year. And this is actually in our equity long short portfolio over on Collective 2, and has been doing quite well since we added it in, I believe, early December. Microsoft, flat and heavy like the other mega caps. Netflix doing its own thing, uptrending in the short term, and looks like it's coming up to test the top of its range. So it looks like that trend, after being absolutely smashed last year down to 160, and look at that, it's already a double off the lows. Nvidia uptrending on the daily, and Tesla, the one everyone watches and talks about. So it looks like momentum has definitely slowed, as we can see on the range strength flattening out from its extreme reading below -20. We're still 29% below the 50-day. A lot of volume. I am pretty sure the high probabilities here this is a bottom. At least in the short term. I'm not saying that we're just going to start ripping back up to all-time highs. I would actually even expect the downtrend to continue, but at least in the short term, we're so stretched below and there's so much volume coming into this thing. I would expect come up and tag the 50-day around probably 160, 155 by the time we get back up there. Then we could continue on its downtrend. Okay, so looking at all that with what's happening across the board, The big event this week is obviously Thursday, CPI number. I've got a feeling that it's going to come in better than expected, and we are going to rip back up to the mother of trend lines, as they call it, which would be around 402, 403 on the SPY. So it's a bit above 4,000 on the SPX, and that'll be the big test to see whether we go through it like the Dow Jones has. As actually Dow Jones is showing bullish on the medium term, unlike NASDAQ, which is most definitely bearish and keeps testing the support, and the more we test it, the weaker it's going to get. I've got a feeling that we are going to break through this in Q1. Small caps just holding on a bit better. However, I do think we are going to rally up to this trend line, and that could be a little bit of a bull trap, and it'll be interesting to see what happens when we get up to that trend line. Alright guys, thanks for watching, and we'll see you again tomorrow for tomorrow's price action.